If you don't know this, then you need to stop trading right now, or you will lose a lot of money quickly. What I'm about to show you will forever change your P&L and the way you handle your trades. I have never met a trader who practiced this properly and consistently, but when they learned it, their trading changed forever. Oftentimes you will click to watch a trading video, and it's a video about how much a trader made on any given day, or how much they made on the month, or what about the color of Lambo they want to buy next. Very few videos will teach you this, and it's time to change that. In this video, I will show you 2 examples of this secret and how to implement it right on the chart, showing you proof on my own charts with my own orders executed. I have applied this same secret to my own trading on options, stocks, and futures. I'm going to share with you my metrics, and within those metrics is the secret no one talks about on YouTube. And the best part about this is you can start applying this tomorrow to your trading and change your trading forever. First, let me show you my metrics. Then I will show you how it looks executed in the chart so you can start practicing as early as tomorrow. All right, guys, so let's jump into my metrics here. Here are a total of 343 trades done. Now, obviously, I scale a lot of positions, so a lot of these are just one, let's call it one trade where I entered at different points and exited at different points. Nonetheless, 343 transactions were done here, and I was only correct 47% of the time. That's right. That means only 47% of the time I was actually green on the trade. With that said, my total P&L was $9,128. All right. Now, why is it? Here is half the secret. I'm going to give you the other half here as we progress in the video. Half the secret is keeping your winners larger than your losers. And that sounds so easy, right? You hear it all the time, but do you know how to implement it? Well, in the latter half of this video, I'm going to show you on the chart exactly how you can implement this in your trading and start turning your trading around. So here you see my largest winning trade, $695. My largest losing trade, only $375. All right, that is very key. That is very, very important in your trading. You want to make sure that your losers are always smaller than your winners, right? You want those winners to be much bigger, and there's various ways to accomplish this, and we'll go over them as we progress in the video. Another part that you want to see in here is my average winning trade, again bigger than my average losing trade, right? This is something you want to see across the board. This is the only way that you can have a 47% accuracy and still be profitable on your trading, right? Now, the max run up here was $9,135. The max drawdown was only $3,900. Again, the max run up eclipsed the max drawdown. The largest winning trade eclipsed the largest losing trade. Okay, that's what you always want to see. Now, another part that you want to see here that is extremely, extremely important is the average winning trade time, 1 minute 34 seconds, nearly 2 minutes almost, or a minute and a half, a little bit over a minute and a half. Your average losing trade time, 58 seconds, meaning as soon as we see that this is not a trade that is working according to the plan, not just because you saw red in your unrealized P&L. As a matter of fact, here's a little secret, a little tiny secret. Put a piece of tape over your screen, or just do away with your unrealized P&L. It has no business there. You trade a trade plan, and the only way you stick to that trade plan is if you ignore that unrealized P&L. But when these trades did not work out how they were supposed to according to the plan, we cut them loose. Longest winning trade time, 7 minutes 3 seconds. Longest losing trade time, again 4 minutes and 20 seconds. The longest winning trade eclipses the longest losing trade. Why? Because we want to make sure we let these winners run. Now, how do we do that, guys? It's by scaling out of the position. You don't hold on to your entire position, hoping and dreaming you reach that final target. No, you have multiple targets on the chart, and you take profits as you go. Now, let's move on to another one with a better accuracy, and I'll show you those stats. Okay, so here you go. And now we have slightly better stats here, right? We have 76% accuracy, similar P&L total, but much, much, much better accuracy. Now, this higher accuracy tends to allow one to feel the trade a little bit more freely, in the sense that you don't have as much stress, right? But we still want to focus on making sure that these winners are way bigger than the losers. This, my friends, is called risk management. And the only way that you're able to make sure that that happens is by placing yourself in a specific kind of trade. And that's what we're going to go over next in the chart, where I'm going to show you how to place yourself in these specific trades. This means you're just going to do a lot of sitting and waiting. That's part of the secret. It's a lot of sitting and a lot of waiting for these specific setups to come to you in order for you to put on the trade and execute the plan accordingly. Now, here we have 21 trades, $9,343 in profit, 76% in accuracy. Largest winning trade, 1,150. The largest losing trade, 200 bucks. That's how you win, guys. Average winning trade, $609.38. Average losing trade, $91. That's how you do it. Standard deviation, 265 on winners, and on losers, 77. Now, look at this and tell me it is not a work of art like Picasso. Average winning trade time, 11 minutes. That's the average winning trade time, 11 minutes, 30 seconds. The average losing trade time, 2 minutes, 35 seconds. Cut the losers. What do you want the losers around for? You don't want to hang out with losers. Longest winning trade time, 20 minutes, 1 second. Longest losing trade time, 3 minutes, 27 seconds. The max run up was 9,400 and the max drawdown was $274. Now, again, the only way that you can achieve these types of metrics where you can have a winning trade be $1,150 and your largest losing trade in that same stint be only 200 bucks is by putting yourself in a specific setup. And that specific setup is what we're going to go over. Now, it's not necessarily a specific chart pattern or a specific trade put on because of news that's coming out. It is solely you and your discipline. Now, let me show you on the charts how to put on these specific trades. Okay, so here is example number one. Example number one, we have the NQs, we're trading futures. And remember, this is something you can do across the board. I've done this with stocks and options. I've done this with crypto. It's the same exact plan. This is exactly what I teach in all my courses. You want to make sure that you're trading the exact same type of plan, always making sure that your risk and your reward are the same across the board. Here we have the NQ selling off, finding a little bit of a support and giving us a little weak volume bounce. This is very key to the setup, but this is all about managing risk. And the way you manage risk is by making sure that you're risking on every single trade the same dollar amount. The only thing that's going to ever change is going to be your position size, but your risk on the trade should be the same always on every single trade, whether it's $50 or it's $5,000. Whatever that is what you're going to risk on every single trade. Now pick a dollar amount, another little secret, little golden nugget for you. Pick a dollar amount that never makes you nervous. If you get that bounce back up into this zone here, which is 18,340, that's going to be the resistance zone identified by me on a larger time frame. We can go over exactly how I pick out my levels on another video, another day. For the sake of this video, it's how to manage the risk. I have identified this 340 area as my resistance. And because I've identified that level as resistance, I'm going to go ahead and get short in front of that zone. Now I want to get short as close as possible to that zone, meaning I have to be willing to sit here and wait for that level to get tested as close as possible to it. Sometimes it's a little bit above it, sometimes it's just underneath it, but I have to sit here and wait. If this NQ would have continued going down and down and down and down, well, then maybe this 340 level would now no longer be the level I look at. I'll have to look at a different level. But if we can bounce back up into that zone after the sell-off, that's where I look to get short. If we break up and over it, that's where I stop out of the position. Now, by getting myself short in here, which was roughly about 18,335, right? 5 points away from 40, I'm risking 5 to 7 points in risk, okay, for the chance at making anywhere from 15 to possibly 20 or 30 points in rewards. So right here, I'm risking, let's call it 5 to 7 points, and I covered this position well underneath 20. Giving me roughly anywhere from 13 to 15 points in win, where I was only risking 5 to 7 points. Okay. If I would have risked the 5 points and I made 15, What is that? Exactly, right? I'm 3 times my risk. I'm getting 3 times the reward to my one of risk, right? Or if I only got 2 units of risk on, I'm sorry, 1 unit of risk on with 2 units of reward, I'm still doubling, right? So if I'm risking 300 bucks, I'm making 600 when I'm right. And that's how you keep that risk to reward parameter sound. Now, let me show you another example. Okay, so here you have again the NQ. This time I went for a long setup because I want to show you that this type of tactic or this type of risk management translates across the board. It doesn't matter if you're shorting, it doesn't matter if you're going long, it doesn't matter if you're trading Bitcoin or if you're trading Ethereum. Speaking of Bitcoin, check out the comment section and description for an amazing broker, a top tier broker for you to use to trade futures on Bitcoin and other crypto. So here we have 18,510 as a previous level of resistance right in here, and then again right in here. And this level has broken to the upside. And we've broken it to the upside and pushed on this candle here. And again, volume profiles come into play. We will go over this in future videos. For the sake of this video, which is all about risk management, we've dropped right back up into that previous resistance zone, and it shows up as support. I go ahead and get long right there. Now I'm long from 18,511. My stop zone is 18,505. So I'm roughly risking, about 6 points in risk here, and we get a quick pop right back up here over the highs into this 18,530 zone, 18,528 zone. And that right there, guys, was just a monster trade for me. It was an easy 15 to 18 points in wins with nothing more than a 5 or 6 point risk. Now, if you ask me, hey, Jesse, are you willing to risk $5 to make 18? And you multiply that times what this is, and I'll say yes. And I'll say yes every single day, every single morning for the rest of my natural born life, because that is proper risk management. I am risking only 5 to 6 points to make 15 to 20 points. That is a no brainer setup. Now, you only can do this when you sit and you wait for your setups. You identify your levels, you get your position in front of those levels, you set your stop losses, and you make sure that the chart is showing you that you only have 5 or 6 points of risk. Or if you have 10 points of risk, that's fine too. So as long as you're risking 10 points for the shot at making 20, 30, 40 points. If that is the case, then it's perfectly fine to risk 10 points. If you're risking 20 points, well, then you better make sure that you have the shot to make 40, 50, 60, 80 points. You want to make sure that your risk parameters are always set in stone in that way. If the chart isn't allowing for you to make that many points, then you most definitely cannot take on that kind of risk. Oftentimes, you'll see people will chase something higher and they'll grab their position at the highs, and then they have 20 points to the downside, right to the support zone. What will happen very often is they won't allow for it to pull back into those 20 points, let's call it that support zone. They'll stop out short of that. The vehicle you're trading will pull back into that zone and it'll bounce and push up to new highs. Multiple things happen here. Your stop loss wasn't set in the right place and you were FOMOing into a play, chasing it higher. That is bad for business. You cannot risk 20 points to make 10. Cannot do that. That is never going to work out well. Even risking 20 points to make 20 is highly not something that we want to be putting ourselves in, because a 1-to-1 risk to reward ratio isn't ideal. You ideally want to risk $1 to make $2, $1 to make $3, preferably. The same case here, we're talking about risking 5 to 6 points to make 15 to 18 points. Those are the type of parameters you want to put yourself in. That is exactly how you're able to have metrics like the ones I showed you and manage risk correctly and start changing your trading quickly. Now you're ready to start practicing proper risk management. Let me know your thoughts in the comment section below. Smash that like button for me. Subscribe to the channel and hit the notification bell so you're alerted when I upload my next video. Thank you very much for watching, and I'll catch you on another one. Peace.